Is it a failed experience, Sir Howard? Is negative rates past its sell date?
I don't think we can yet say it's definitely failed, but I think that Philip Hildebrand makes some very good points. And there's a companion interesting piece by Hugh Van Steenis, who has been advising Mark Carney here on the future of the financial sector, which makes similar points. And I think the key insight that they may have is that the problem with negative interest rates is that you reduce bank profitability, and as a chairman of a bank, I well appreciate this, and that in those circumstances, banks, if they become unprofitable and have to rebuild their capital, may well not be lending as much as you think they should. So that the transmission mechanism between monetary policy and credit expansion and the real economy breaks down, because by damaging the profitability of the bank so much as to prevent them from lending, you mean that your impact on the economy is much, much less. Now, the alternative that Philip Hildebrand argues for is direct money. In other words, this is helicopter money by another name. I think people have decided helicopter money doesn't sound like a good brand, so they've tried to think of another way of branding it. The difficulty, and he confronts this directly without answering it, is who decides to whom that money goes and how much of it there should be. And he says you need a new mechanism. But so far, nobody's produced a good mechanism which brings together fiscal and monetary policy and provides a framework in which this is a sensible injection of money rather than an incontinent splurging out of money, perhaps to unworthy causes. And that's the issue I think we need to address. And I don't believe anyone's produced a good answer to that yet.